All right, hey, what's going on? This is Dan Keller, your mortgage advisor at New American Funding. I want to welcome you to another episode of Making Sense of the Markets. Today is Friday, April 28th. This month is over, and we got all of our loans closed on time. And in addition to that, we had a record month in my office with my team. So we're getting ready to go out and celebrate that. But I wanted to make sure I brought you this information. This is a follow-up from last week's Making Sense of the Market episode in regards to appraisals. But real quick, let's talk about the markets. What I want to show you real quick, I've talked about this a lot. There are trends in the market, and right now we're certainly seeing a trend. Over the last week or two, the market's kind of leveled off, and we're starting to see signs of an improvement. So maybe perhaps interest rates improving. What could cause that? Today, some reports came out in regards to the GDP. Remember, the GDP report is the gross domestic product report. It's the number one indicator. It's a leading indicator to the state of our economy. Came in really low at like 0.70%. I think we need like 2 or 3% to just be floating above water. 5% is considered healthy. So it was pretty weak. It was pretty ugly. And pending home sales missed the mark in regards to expectations as well, allowing the bond market to improve and rates to gradually, it looks like this next week we'll see some improvement, but I'll keep you posted. One of the things I want to talk about, this last month I had an opportunity to do 3 cash out refinances. And I want you to know this so that if it may be applicable to you down the road, or you may know somebody, cash out refinances come at a higher cost. So for example, if 30-year fixed rate is 4.25, a cash out refinance the interest rate may run at about 4.5%. So just kind of keep your eyes and ears open surrounding those questions or those issues. Another thing, one last thing, I'm going to do a follow-up video on dual markets. That video caught a lot of interest. I got a lot of phone calls this week. There's a lot of sellers out there that wanted more, that requested more information on that. So I'm going to continue to get you more info on that. So government rates, we're still in the upper 3s, really attractive 30-year fixed rate programs. Again, depending for conventional Fannie Mae rates, depending on your down payment, your credit score, and the type of property you're financing, rates are still in the low 4s, 4.1 to 4.375. I locked one this week at 3.99. Borrower did pay a handful of points, put a bunch of money down, but still a great opportunity to finance a home. So let's talk about this appraisal interview. So there's 3 parts. The appraiser mentioned that there's 3 parts to appraising a home. The first part is identifying the most recent, most similar sales. Okay, that doesn't seem too complicated, but the second part of that is looking at the contributors like location, size, quality of construction. So for example, this last week we had an appraisal in the Snohomish Mill Creek area. So it was a Snohomish address, and it appraised at approximately just under $600,000. Well, the seller and the listing agent wanted to know why we didn't use comparable sales from a nearby location called the Gold Creek area. Well, there's a difference between Gold Creek and this particular area. Gold Creek homes sell for a little bit higher. It's closer to Mill Creek. And so, you know, the location, the size matters. Quality of construction, who built the home, that matters. And then the third factor is just the appraisers have to know the market. They have to be familiar with certain areas. You know, there's different areas in Bothell and Mill Creek, and there's different areas in Seattle that are different from other communities that are other neighboring communities. So that was important. 3 factors that are considered. Okay, this is big. If you're a real estate agent, listen up. Time, the last 3 months. They're looking at comparable sales in the last 3 months. Distance. They're looking at a 1-mile radius. Yes. Will an appraiser go outside of a 1-mile radius? Yes. But ideally, they're looking for comparable sales in the last 3 months within a 1-mile radius. And then number 3, within a 20% margin of that subject property. So if the house, for example, is 2,000 square feet, a 20% margin of the square footage. Same thing with lot size, etc. So that's it. Hey, I want to share an evidence of success or evidence of a world-class mortgage experience. We just closed today. A client of ours, Mr. Chu, he's working with Brandon Wooten with Windermere up north, and Brandon can testify on this. This was a tough deal. It was a bank-owned home. The seller, being the bank, would not make any concessions, any improvements to the property. We were able to do a USDA Zero Down home loan with a borrower paid holdback, closing in less than 30 days, smooth as silk. So I wanted to share that. These are one of the things that we are having to do in our bank and in our office to help with this inventory crisis. This particular borrower, first-time borrower, Really, he's been shopping for a home for a couple of months, really wanted to purchase this house. And without us making those exceptions for the holdback, this property is not financeable under USDA's guidelines. We got it through. Happy borrower, happy real estate professionals. I want you to do me a huge favor. If you know of somebody that could use this information or use our services, please share this. I've got a great team and we're ready to help, okay? That's all I have for this week. I'm going to go celebrate with my team. I will talk to you next Friday. If you need anything from me in the meantime, feel free to reach out to me. I look forward to being a resource for you. Take care.